With hardly a year of operations under its belt and scant results to show for it, UBI blockchain internet is riding buzzwords to a stock boom. It's become one of the most valuable publicly traded companies in the Bitcoin universe, second only to Longfin Corp. The stock surged almost 1,000% this year, valuing UBI blockchain at $12 billion, RM $489 billion. Now, the Hong Kong-based company has registered to sell an additional 72.3 million shares owned by executives including Chief Executive Officer Tony Liu, regulatory filings show. But persuading would-be shareholders to wager on an untested business model could prove challenging for a company with 18 employees, no revenue, and whose regulatory filings list a disconnected phone number. The volatility of Bitcoin, considered a proxy for companies that rely on blockchain technology, isn't helping either. The profile of this company is scary, says Charles Lee, a professor of management and accounting at Stanford University. Blockchain is right at the apex of saliency right now. But you have this problem because it's hard to verify anything: the technology, the fact that it's in China. You certainly don't want to own this stock. Blockchain is a big, universally accessible database that keeps a digital record of transactions. UBI blockchain says in filings with the U.S. Securities and Exchange Commission that it wants to harness this capability to trace a food or drug product from its original source within the context of the Internet of Things to the final consumer. T.J. Jeske, UBI's attorney at law firm Jeske Law, explains that UBI blockchain is in the process of building technology to trace pharma products made in China from manufacturer to the end user. The idea is to prevent counterfeit products. Prospective shareholders might struggle to learn more about the company through other means. Calls to the phone number listed on the company's SEC filings went to a number that has been disconnected, and a call to UBI blockchain's New York office rings to the mobile phone of Hong Zhu, who is listed in the filing without a title. Zhu, who is selling 250,000 Class C shares in the offering, didn't return calls seeking comment. UBI blockchain's board approved a 3-for-1 share split, according to a filing Wednesday, to improve trading liquidity and to enhance the company's flexibility in connection with possible future actions. Each shareholder will receive a dividend of 3 common shares for each share of Class A and Class B common stock owned on January 9. Like many companies hitching their fortunes to Bitcoin and blockchain technology, UBI blockchain's stock has seesawed violently this year. The shares surged more than 1,000% in the early part of December and continue to swing with Bitcoin-like vicissitude. The company's shares rose as much as 27% early Wednesday before giving up much of those gains, only to surge 21% after news of the stock split. They were trading at $39.99, RM 163, at 1:10 p.m. in New York. Filings portray a company whose finances are tenuous. UBI blockchain has an accumulated deficit of $3 million, RM 256 billion, and just $15,406, RM 820, in cash on hand.